morning, everybody. Mike Vacchi, Princetontrader.com. We're here with your Thursday morning pre-market webcast. Okay, so as we mentioned in the evening recap last night, 73 has been an important area, and it was an important area through the Globex session. With Europe Open, we've popped off 73, and we're coming up to yesterday's opening range up at 77.5. So we're going to have to see today if and we've got jobless claims coming up in 55 minutes. Then we've got Philly Fed, Bernanke in front of the Senate Banking Committee, as well as leading indicators. That's all at 10 o'clock. We're going to have to see how the bulls can do to press up and through 80.5. We've got double pivots today down at 74.25. Now let's get out on the daily chart. We're starting to consolidate. We've been doing it for 5 days. So the argument that we need to come back down because we've been going up at such a rate, that argument to me is over. The rate of ascension has leveled off, kind of like it did here, right? We kind of battled for the middle band, and when that was won, then we kind of went ahead and took out the upper band. Now we're consolidating above the upper band, and I think a lot of this has to do with Bernanke. A lot of this has to do with the summer. The last couple of days, at certain points during the day, it starts to feel like a Globex session. It starts to feel like you're trading at 2 o'clock in the morning. And my best suggestion to all of you is not to trade that stuff. Wait for your setup. Wait for the volatility that you need for what you do. Don't trade the market just because it's open. Because in situations like yesterday, when 73 can't get cracked and we can't get through 77, 78, yes, it's a range, but at the same time, it's a very violent range. And it's a lot of head fakes and a lot of chop in between. It's not gliding up to 78 and gliding back down to 73. It's whipping and whipping down, whipping up a handle, whipping down. It's very choppy to trade, and there will be better moments in time to trade your capital than in situations like yesterday afternoon. So for me, I have kind of a contrarian view on all this. I think the longer we hang around in here, the better it is for the bulls. I think the bears need to knock this market down. They need to keep they are breaking prior lows, but they need to hold these lows and close on these lows. They are dips to be bought, is what they are. So the longer we hang around up here, for me, the more and more this starts to look like a launching pad for 1685. And if we print into 8688, we should go to 1700. So the bears are running out of time to really knock this down. They need to knock it down below yesterday's low, 65.75, and get back into testing this 1650 area, which in my opinion needs to be tested. The bears have to win that test. They have to break it. If they break it, it should open up middle band. If they don't, then the bulls are really in the driver's seat for 1700. So that's the dynamic I'm seeing on the chart. If you're looking for definitive direction from me, this is not the day to determine that. We're in a 10-handle range up near highs, and neither party seems very interested in pushing the agenda either up to new highs or back down to test 1650. So we'll see what today brings. Everybody have an amazing one. Mike Vacchi, Princetontrader.com. Check out our new evening recap webcast we're going to be doing at night. Basically, just me recapping the day, looking ahead to the next day. That'll be included with the pivots every night. So the pivots are going to start coming out at night. They're going to come out with a webcast, and that's going to be exclusive to the Princetontrader.com website. So follow me on Twitter, check out the website, and come check out the chat room for a couple weeks and see if it fits in with your trading. Take care, everybody. Trade them well.